How's it going, everyone? It's Sam. The market was up significantly earlier today. Now it's falling down a bit. There's so much uncertainty. We just got news that the China tariffs went into effect. And actually, there's some fake news about the China tariffs. I'm actually going to play you the news I'm recording it live from the White House. They're briefing on tariffs. So you're going to get the most up-to-date news as you possibly can about this tariff situation and what's going to happen with China and other countries as well. And that will be towards the end of the video, but there are a lot of updates and some clips I want to show you beforehand. I want to actually play you a clip. This is from Howard Marks. You might not have heard of Howard Marks before, but he's very well known in the investing community. He is someone that's called the 2000, 2008, and 2020 crashes. And unlike most people, he's not one of those perma bears that just calls 20 of the last two crashes, right? He has been pretty much right on with these crashes. And unlike a lot of other people, he's actually deploying capital pretty aggressively during these kinds of crashes in the past. He's got a fantastic track record. He's gone 19% annually since the 90s, which if you're in Bitcoin, maybe that doesn't sound like a lot, but in traditional terms, that's crazy. That's almost double what the S&P 500 has done, and that's after fees, and he's been doing this for decades. How he does this, he avoids big losses, he deploys capital aggressively when others are panicking, and he's also writing with rare clarity about risk and cycles, helping long-term investors think better. He does a regular newsletter, I believe. And yeah, he has a very Buffett-style beat the market every year track record, according to ChatGPT. So I want to play what he just said about these tariffs, whether you should be worried at times like this, whether it makes sense to buy or to sell when there's so much uncertainty. I'll just play part of this clip because this is a 15-minute clip, but then I want to go through what's happening right now in the markets, why VOO went up so significantly, right? We were up 3.5%, 4% on the day, and right back down. Now we're up 1%. So what's happening? Like, should we be worried? Should we be deploying capital? Let's talk about that. If you don't mind, hit subscribe so you can see future videos just like this. Also, big shout out to myDid. We'll talk about that later in the video. And if you do want to trade crypto, there are links underneath the video to WEEX. There's a big trading competition on right now where you can get part of the $800,000 prize pool, and it just depends on how much you trade and how profitable you are. There's also a link to CoinW where you can get access to professional traders for free. They have a trading group there. There's more details underneath the video. Also a link to BTCC and Blowfin and BitUniX as well. Blowfin and BTCC have 10% bonuses, and on BitUniX, I'm working on a 20% bonus. So be on the lookout for that. Let's play this clip from Howard Marks on what's happening right now in the market and whether to be scared or not.
You've thrived during your almost 5-decade career, during times of dislocation. Is this a time of dislocation to play or not to?
Well, it's a time of dislocation. Everybody has to judge for themselves whether the reduction in asset prices so far is right, inadequate, or excessive. If it's excessive, you should jump in with both feet. If it's inadequate, you should wait until things adjust further. And it's impossible to make that judgment qualitatively. You used the word measure before. I pushed back a little bit. There's no place you can look. There's no analysis you can do to determine whether today's asset prices are right for the environment ahead. Now, there never is. It's always conjecture. It's always guesswork. That's, in theory, why the greatest investors are great, because they make those judgments better than most people. It's excessively hard today because today we have no idea what the future is going to be. Normally, we think we know what's going to happen in the future. We normally assume the future will look mostly like the past. We extrapolate, and usually it works because the world doesn't change that much. But the world economy and the world order beyond economy, meaning geopolitics and international relationships, has been shook up like a snow globe by the events of the last days.
Okay, so right now it sounds super bearish, right? investors typically invest because they think that they can tell what's going to happen in the future. But right now, we don't have that clarity, and less now than ever. The good investors do so well. They are so good at investing because they have clarity, or they're smarter than other people. They can tell what's going to happen in the future. They can spot trends. But right now, we don't have that necessarily.
And nobody knows what it's going to look like. Nobody knows. I dare say, if you tell me that what our rules will be 6 months ago, 6 months from now, I'll bet you're wrong. This is in flux. And if you think it's in flux, then by definition, you don't know what the future holds. And then even if you know what our country's going to do, and it's going to be that way 6 months from now, we don't know what other countries are going to do, what the ramifications will be. And so, I always inveigh against forecasting. I don't believe in macro forecasting, my own or other people's. And we know much less today than usual. Now, people who like to run their lives according to forecasts, they say, well, this is going to happen in the future, so I'm going to do this, and this is going to happen in the future, so I'm going to do that. What you really need, if you like to work with forecasts, is you need two things. Not just a forecast. You need the forecast, but you need an estimate of the probability that your forecast is correct. And today, whatever your forecast may be, you have to say, the probability that I'm right is lower than ever, because the probability that we know what the future is going to look like is lower than ever. And that's how I feel.
Is this a time to be fearful or greedy?
That's a big question, right? We have less certainty than ever. Sure, prices have come down, but if we don't know what the future looks like, should you be buying? That's a question. And might I remind you, for anyone that's like, oh, I don't really care too much about what he has to say, if you had put $1 in his fund in the 90s, mid-90s, it would have performed 10x better than just buying the S&P 500. 10x better. So if you had put, let's say, $100,000, 1995, into his fund, you would have gone that up to about 18.7 million compared to about 1.7 million in the S&P 500. So it's really important, I think, to listen to people like this that perform so well.
What you have to say, Bloomberg's offices, you have to think in terms of your neighbor. The department store. Bloomingdale's just put everything on sale. Prices have come down for the S&P 8% in the last 2 days, and much more in the last 6 weeks. It's on sale. That should encourage people to think about buying. Will they go down further? Nobody knows. Are the prices fair? Nobody knows. But everybody runs from the market when prices go down because they think it connotes risk. It's just stuff going on sale. And, of course, it takes, well, I was going to say a pro, but it takes a prescient pro, of which there aren't many, to know whether, as I keep saying, the discounts are adequate or appropriate. But certainly you have to look, and it doesn't make any sense to say, just a minute, I did XYZ when the price was 100. Today the price is 90, so I'm going to boycott it. That doesn't make any sense on its face. You have to take a hard look.
Do you still think?
Okay, so he likens it to a sale. We've all heard this before, right? When something goes on sale, you don't run to the exits thinking that's going to fall further. No, you take advantage of the sale. That's something that you need. We need to invest money into the market at some point if we want growth, right? And he points out that the best investors are the ones that can determine whether it should be on sale more or not. But the fact is, you and I probably aren't the best investors. So when something goes on sale, it's probably a good time to be buying it if you need to buy it over the long term and things get more expensive, right? So he says basically, yeah, it's probably a decent time to be buying, even if there's not a ton of certainty, which I think is fascinating. Now, I want to cover what was just said about China and tariffs, because They just went into effect. I want to cover the drop in the market because there is more of a drop happening as we speak. We have some cryptos falling down very significantly, but first, a word about myDid. Now, before we go on, I want to thank today's show sponsor, myDid. myDid is the future of digital identity. They're a decentralized identity platform that gives users full control over their data. They remove the reliance on centralized databases, ensuring privacy, security, and seamless verification in Web3. Users can earn verifiable, decentralized badges that prove achievements, skills, and contributions. It enables trust-based interactions within communities, DAOs, and Web3 projects, and they're already integrated into several ecosystems. You can see a lot of them over on their Twitter. They are doing a airdrop right now where you can get your tokens. New SYL tokens are waiting for you. Of course, if you want to check this out, I'll leave links to it underneath the video. Of course, big thanks to myDid for sponsoring this part of the video. Now, crypto's falling right now. After holding ETH for 900 days, a whale finally capitulated, selling 10,000 ETH or $16 million today. This whale originally bought 10,000 ETH at 12.95 million at an average of 1,295. This was nearly 3 years ago, like 2.5 years ago. He didn't sell ETH when it broke through 4,000. So he sold today with a $2.75 million profit. And at the peak, he had 10 times that in profits, 27.6 million. Ugh, that hurts to see. But yeah, there are a lot of capitulation events happening right now. There are a lot of people freaking out. The markets are falling, to be clear. Like, we have VOO that went up, and it's faking some people out, right? Some people this morning, I even felt it. I was like, ooh, I wish I had bought more yesterday. Even though I bought a good amount yesterday, I wish I had bought more. Maybe I should buy some more today in case these tariffs clear up, right? Yesterday, we saw such a big jump while the market was open because there's fake news about the tariffs going away, right? We jumped massively. I mean, we're talking about there was a 7% move in 20 minutes. And then it came right back down because we found out that the news was fake. But the news was that the tariffs were going to be paused for 90 days. So you can see that the market wants to go back up on this tariff news going away, but we're not there yet. And actually, it's maybe getting a little bit worse in the sense that the White House just said that the additional 104% tariffs on China went into effect today at noon. So the tariffs are starting, right? They did not come to a resolution. There's so much back and forth. Like, China wants to fix it. The U.S. doesn't want it to be, doesn't want to work with them until they give them something really good. Like, there's so many things that we're hearing about. But supposedly, the tariffs went into effect here. Of course, there are 50 or 60, 70 different nations now, supposedly, that are talking with the U.S., trying to figure out how to take tariffs off, which increases trade, which will be good for the U.S. economy if there are less tariffs from other countries. But the White House says Trump won't let Wall Street run the economy. This probably didn't make people feel that much better either, right? In the stock market, like, if Trump's not capitulating because the market's down 15% in 3 days, what does that mean? Well, it means that he has to act tough, right? He has to act tough. He can't say, "Oh man, the market's down. Yeah, Wall Street's right. I'm gonna get rid of this tariff policy." No, I mean, he's been talking about this for decades. He's got to act tough, at least until he gets something out of it, right? Until he gets some results. Now, that could cause us to go down further, but I see that as a buying opportunity. Okay, now the White House is coming and talk about tariffs right now and who's playing ball, who's not, what's happening there. And the market is very volatile right now. Let me play this clip. I filmed this live when it was coming out.
Smackdown to a rogue left-wing, low-level district court judge who have relentlessly tried to stop President Trump from using his core constitutional powers as head of the executive branch and as commander-in-chief. The highest court in the land made it clear that the President of the United States has the power to protect our homeland and forcibly remove foreign terrorists who pose a grave threat to families and communities. Thank you to the Supreme Court for upholding the rule of law and protecting the Constitution. Our message to the monster Tren de Aragua and MS-13 terrorists still hiding illegally inside our country is clear. Deport yourself now, or you will be locked up and sent back to your home country. On another matter, the historic Liberation Day announcement last week by President Trump made it very clear that the era of American economic surrender is over. President Trump is no longer going to allow American workers and companies to be ripped off at the hands of foolish trade practices that shipped away millions of high-paying jobs and hollowed out communities across the country. It's America first, all the way. And despite fear-mongering by the media, the world is clearly responding to President Trump's approach. Just yesterday, President Trump held a bilateral meeting with Israeli Prime Minister Benjamin Netanyahu here at the White House. The Prime Minister pledged to immediately eliminate America's trade deficit with Israel and remove their trade barriers. Israel's proactive approach should serve as a model for the rest of the world. Also yesterday, the President spoke with Japan's Prime Minister, who wants to negotiate as well. The President also spoke to the acting President of South Korea this morning. He has tasked Secretary Bessent and U.S. Trade Representative Jameson Greer to lead these talks. In total, since the Liberation Day announcement, nearly 70 countries have already reached out to the President to begin a negotiation. Countries are falling over themselves to reform their unfair trade practices and free open their markets to our country. Why? Because these countries greatly respect President Trump and the sheer power of the American market. These countries realize they've gotten filthy rich over the past few decades by imposing substantial tariffs on American-made products and ridiculous non-monetary barriers to block out American industry. The jig is up. Past American presidents sat by and let this happen, but President Trump stood up for our country, and he is saying no more. The president's message has been simple and consistent from the beginning. To countries around the world, bring us your best offers, and he will listen. Deals will only be made if they benefit American workers and address our nation's crippling trade deficits. America does not need other countries as much as other countries need us, and President Trump knows this. He's going to use the leverage of our markets and our country to the advantage of the people he was sworn in to represent. On the other hand, countries like China, who have chosen to retaliate and try to double down on their mistreatment of American workers, are making a mistake. President Trump has a spine of steel, and he will not break, and America will not break under his leadership. He is guided by a firm belief that America must be able to produce essential goods for our own people and export them to the rest of the world. A strong America cannot be solely dependent on foreign countries for our food, medicines, and critical minerals. And America must always maintain a robust defense supply chain. Reprioritizing and strengthening our manufacturing industry are essential national and economic security issues of the utmost importance to President Trump. By focusing on supercharging the onshoring of American manufacturing, the president is already delivering on his promise to usher in an economic golden age for our country. Just look at Friday's jobs report, which smashed expectations for the second straight month. The American economy added 228,000 jobs, nearly 100,000 more jobs than economists predicted, and the fourth highest month for private payroll growth in the past 2 years. There was also a sharp increase in transportation, construction, and warehousing employment. And in just 11 weeks, President Trump has secured more than $1.5 trillion in private sector investment. This is $500 billion more than Joe Biden secured in his entire term. This record-breaking private sector investment will create roughly 350,000 American jobs and counting. If you add up all of the investment pledges from foreign governments, President Trump has secured an incredible $5 trillion in total investments already. In the months ahead, President Trump's pro-growth economic agenda will be fully realized. The largest deregulatory effort in American history is underway. Unnecessary, burdensome, costly red tape is being eliminated by this entire federal government every day, driving down costs and massively boosting small businesses. So far, President Trump's deregulation effort has already saved Americans more than $180 billion, equivalent to $2,100 per family of four. The president's drill baby drill energy agenda, which he will discuss later this evening in the East Room, is capitalizing on the abundance of natural resources under our feet to generate more affordable electricity, cheap gas, and quality new jobs. All of this will combine to end the Biden-imposed cost of living crisis that's absolutely crushed American families. Under President Trump, the American energy industry will lead the globe over the next century, delivering lower prices and significantly strengthening our country's economic position. At the president's direction, Republicans in Congress are working quickly to pass one big, beautiful bill, which will also include the largest tax cut in American history. As President Trump has said, the House must pass this budget resolution quickly.
All right. So the White House sticking to the plan, right? Staying focused on implementing these tariffs if countries aren't going to play ball. And it sounds like some are, right? You got to show the examples of what the countries that are playing ball should do. But China does not sound like they're there yet. Now, the market actually turned red when she was talking. Now it's coming back up. So there's tons of volatility. It's very fickle right now. And we're getting so much news and fake news. You don't know exactly what to think moving forward. Of course, cryptos can go on sale, right? Bitcoin can go down even further. Yesterday, I did play some trades, and we're still up on those trades because it was when crypto was capitulating. But yeah, we do see more downside, right? Ethereum under 1,500. Let's look at Sol. Sol, I think, was down pretty significantly as well, down to 104. So the fact is, we can see bigger sell-offs, but I'm buying fantastic assets at historically really low valuations. I mean, the Mag 7, right? The stocks that everyone's watching are selling at a lower price to earnings ratio than they were in 2022 altogether, right? Like, let's look at NVIDIA. I'm not buying NVIDIA, but let's just take a look. Obviously, this thing is still growing like crazy. And there are concerns, right? People are worried about tariffs for NVIDIA and worried about reinvestment, all that kind of stuff. If the big tech companies aren't making as much, or whoever isn't making as much, they won't spend as much money buying chips. But as we can see here, this is selling at a very low valuation, even compared to 2022, right? I mean, this was selling at 35, 40 back in 2022. Now, yeah, it's selling at 34. A forward price to earnings of 22. Next year's 22. So it's selling at record discounts. I mean, let's look at Google. Google was looking good earlier today. Now, just up 0.25%. This is selling at a 15 price to earnings ratio for 2026. This is one of the most profitable companies in the world. Amazon, record discounts. And we can go down the line. I don't have to go through all of them. But the fact is, these are fantastic companies. VOO is going to be around forever, right? Like, this is the S&P 500, the 500 biggest companies in the US, basically 500 are the biggest in the world. And yeah, it's going to bounce back. It's just always a question of when. Are we going to see this clear up sooner or later, right? Like, how much more downside is there? And I don't know. I can't tell you what's going to happen with the tariffs, but all I know is it's been a very good time to be buying when prices are down significantly. Right? When we see this kind of fear in the market, it's a great time to be buying assets, quality assets. So I'm going to continue. I'm not worried. I'm not worried long term. And look at this, more fake news, this time to the downside. Levitt says the U.S. to impose 104% tariffs on China tomorrow, not today, per Fox Business. So, like, we don't even know what's necessarily happening. There's so much attention on the market right now. There's so much fear that I'm sure that there are manipulators that are saying one thing, pushing it out because they know it'll be retweeted, sent around, talked about in videos even, just like yesterday, right? Like, that it will cause the market to go down or up, and they can play those swings. So yeah, like I said, I'm not worried today. I'm actually hoping that we go further down because that just means the reward is better. There's already uncertainty over the future. I'd rather have lower buying in prices, right? So I'll be continuously buying this dip. I'm not worried. Like I said 5 different times, I'm not worried. I'm actually looking forward to what's happening here in the next couple weeks. And to be clear, there are a couple big things happening in the next couple days. Obviously, tomorrow, tariffs go into effect. We also know that on Thursday and Friday, we're going to get CPI and PPI. And then earnings are going to start here very soon. And we're going to see what companies are thinking. Like, what's their outlook? And there could be some bad outlooks. There could be a lot of just zero guidance moving forward from these companies. So yeah, be ready for anything. Be ready for volatility. Be ready. Like, this is the time where you go work some extra overtime where you try to pick up a side job or two to try to funnel money into the market. Of course, we could keep dipping, but in 2 years or 5 years or 10 years, you're going to be looking back wishing you had bought more. Let me know your thoughts underneath the video. I appreciate it. I'll see you all in the next one. Again, if you do want to trade, you can check out the links underneath. Bye.